Good evening, friends. In today's video, we'll be doing reading commentary on topic provision related to refund of ITC on capital goods on account of zero rated supply, and also whether refund of ITC is admissible on capital goods. To begin with, we must learn what is the meaning of capital goods under GST Act. Here, under Section 2, subsection 19 of GST Act, capital goods means goods the value of which is capitalized in the books of accounts of the person claiming the input tax credit and which are used or intended to be used in the course or furtherance of business. Now, capitalization in the books of accounts means rather than listing such goods as an expense, the goods are added to the company's balance sheet. Some of the examples of capital goods are building, machinery, equipments, vehicle, tools, etc. As we are about to discuss on refund of capital goods on account, refund of ITC on capital goods on account of zero rated supply, we must know what is zero rated supply. Here, zero rated supply means export of goods or services or both as per Section 16 subsection 1 of IGST Act and Section 16 subsection 3 of IGST Act talks about the refund of unutilized ITC on account of zero rated supply. Here, the refund of input tax credit on account of zero rated supply of goods or services or both is claimable as per Section 16, subsection 3 of IGST Act, which read as a registered person making zero rated supply shall be eligible to claim refund of unutilized input tax credit on supply of goods or services or both without payment of integrated tax under bond or letter of undertaking in accordance with the provision of Section 54 of the CGST Act. This Section 54 is a section of refund or rules made thereunder subject to such conditions, safeguard and procedure as may be prescribed. That is rule. Meaning, a registered person who is making an export of goods or services or both without payment of integrated tax under bond or LUT, that is letter of undertaking, is eligible to claim a refund of unutilized input tax credit on supply of goods or services or both. And for determining the refund amount of unutilized input tax credit on account of zero rated supply, that is export, a particular formula shall be used which is mentioned in Rule 89 Sub Rule 4 of CGST rule. Let's read the rule. Rule 89 Sub Rule 4 of CGST rules. Under this, in the case of zero rated supply of goods or services or both without payment of tax under bond or letter of undertaking in accordance with the provisions of subsection 3 of section 16 of the Integrated Goods and Services Tax Act 2017, 13 of 2017, refund of input tax credit shall be granted as per the following formula. So there is a formula to get the refund amount. What is the formula? Refund amount is equal to turnover of zero rated supply of goods, that is export of goods, plus turnover of zero rated supply of services, that is export of services, into net ITC divided by adjusted total turnover. Here, refund amount means the maximum refund that is admissible. Net ITC means input tax credit availed on inputs and input services during the relevant period other than the input tax credit availed for which refund is claimed under sub rules 4A or 4B or both. Now here in clause B, that is this one, net ITC, if we see the meaning of input in section 2 subsection 59 of CGST Act, then we will get to know that input means any goods other than capital goods used or intend to be used by supply in the course or furtherance of business. That is, as per section 2 subsection 59 of CGST Act, input means any goods other than capital goods used or intend to be used by a supplier. This is not a supplier in the course or furtherance of business. Hence, from this meaning of input in net ITC from the formula, it is well clear that the scope of getting a refund of unutilized ITC on capital goods on account of zero rated supply is not there and hence not admissible, and which has also been recently instructed by CBIC through instruction number 03/2022 GST dated 14 June 2022 that net ITC should not include input on capital goods while sanctioning refund of ITC on account of zero rated supply. Therefore, to take ample measure of not taking input on capital goods while calculating the refund amount. And if you do, then you may have to pay back the refund amount along with interest and penalty under Section 74 of CGST Act after post-audit or review of your refund order by the department.